comfort that they can see that you can scale your business. And then also, if you have an existing revenue, existing customers, obviously that's important to highlight. Anything that is positive in your business before you talk to an investor, you need to highlight that stuff. I work with a lot of customers or clients that are pre-revenue, so they're in different stages of development, but the ones that have revenue, we make sure we highlight everything that is positive in their business. In partnerships, do you have any partnerships that will help you scale your business, whether that's through sales or technology, whatever it is, that's important to highlight those components as well. And lastly, what's unique or magic about your business? You really want to highlight that as well when you're talking to an investor. So some of the deal breakers that I also see out there, and again, this is not a comprehensive list in no specific order, but these are some of the things that investors will probably pass on your business if some of these things are a factor. Sending your business plan blindly. This is a very relationship-driven business. Do not send a business plan through the email or through the mail to an investor before you get an introduction. They get inundated with businesses all the time, and they're going to look at plans that come through trusted partners. So that's why companies work with us or any other people that have relationships with investors, because we send the deals to investors and they know us, they trust us, and they will look at the deal. And also, so there's a lot of matching sites out there that allow businesses and entrepreneurs to connect. The deals do get done through those sites, but most of it gets done through the old-fashioned way of calling up someone that you know and talking to them about the deal. So it's a very relationship-driven industry. And also, when you do get in front of investors, start with an exact summary. We create a 2-page summary. We don't send a business plan. That's just too much information. Investors do not want to look at all that. They may look at it down the road when they're doing some due diligence, but the 2-page summary highlights everything in your business, and that helps them evaluate everything. And the investor presentation that I'll talk about a little bit is usually the next step. That's something we will send if they're interested in more information, and then for sure that's what they use for an in-person presentation. But go through relationships before to get in front of an investor. If your business model is unclear, they don't understand it in the first couple sentences of the exact summary, they're going to move on. Your elevator pitch should be your first few sentences of what you do, and it should be very clear of what you do. The management team, as I mentioned before, that's so important. If your management team is inexperienced, has no experience in the industry, that's going to be a factor. There are a lot of young entrepreneurs, and there's nothing wrong with that, but that's why you need to have an experienced advisory board around you to help guide you and fill in some of those gaps. The stage of development, as I mentioned before, it depends on the investor. You have to have a good match. It needs to be the right stage for the right investor. Geography is another important factor. Angel investors historically only invest in places that are a few miles away in driving distance. Now that's changed a little bit over the years, but still most of them want a business that's close to them. When you go up the chain to venture capitalists, private equity, it doesn't matter. But it is something to factor in for real early stage businesses or early stage investors. The industry, you have to match the industry that investor looks for. So you need to do research on the investors out there. And again, if you go through relationships you have, they will help you figure that out. But it needs to match what the industry that they're looking for. Desperation. Don't ever be desperate when you're talking to an investor. This will be a red flag. Every entrepreneur that's raising money needs some money now, but don't be desperate to an investor. That will be a red flag, and they will think your business is probably going under any day now. So you need to be able to survive without the capital. And overselling your business is also another factor. Just give them the basics. We give teasers to the investors. That's why I do a 2-page summary. We don't give them more than we need to. You don't want to say more than, you don't want anything negative come across, so just give them the basics. And again, this is part of the desperation. Just tease them along the way, and as they gain more interest, then you send them more information. And you're not prepared for discussion. That's one reason why we put together these pitches for our clients, and we coach them on the presentation. Again, this is used for any in-person presentation in front of an investor group. you need to make sure you're prepared, you understand your business, and you can answer questions. If you can't answer a question, that's fine. You can get back to the investor, but you have to know your business well. And one thing that a lot of entrepreneurs say is they don't have competition, and that's just not true. If you say you have no competition, then you don't understand your market. Even if the status quo is the competition, that's competition. You may have a brand new product or service that no one has ever seen before, but there's still competition out there. The fact is, if no one buys your product or service, that's your competition because they haven't bought into it. So make sure you understand your direct or indirect competitors. Even if there's people that play around your space, but they could enter your space, you need to be aware of who those are. And as I alluded to before, the lack of the investment process. When you're talking to an investor, you need to understand their industries, their state, the types of businesses they invest in terms of the sizes. You should understand some of their portfolio companies, but really research the investor before you talk to them because they're going to be researching you as well. So what I'd like to do now is go over a practice pitch. I'm going to give you show you a template, and then I'll go over a real pitch that I put together. So this is going to go over the different slides and the different information you need to put on a presentation before you talk to an investor. This order, this is not the magic order, but this is usually what I follow. You want to get them excited in the very beginning, so talk real general and highlight your business, what you do, any milestones you've reached so far, just anything to get them excited so they want to listen to the rest of your presentation. It's good to start with a story sometimes of why you started this business and how it's affected you or how it may affect the investors themselves. It's good to then talk about the problem. What's the problem out in the marketplace that you're addressing? This, again, sets the stage for the rest of your presentation. How large is this problem? And then what's your solution, your product or services? How are you addressing this solution? The market, how big is the market you're going after? And then what segment of the market are you targeting? This will give an investor a good sense of, how large a piece you could capture in this market. Your sales and marketing strategy. How are you actually going to attack this market? What are your strategies in place, whether it's direct sales, channel partners? What do you have in place that's going to help you scale your business? And if you're an existing business, if any significant companies to mention, what's your pipeline of clients? Or who are your target clients. This is not on every slide, or not every presentation, but if it's something worth mentioning, that we put this in here. And if you have any partnerships or current partnerships, possible partnerships that will help you scale your business, if you have enough of them, it's good to have a separate slide about this as well. Competition, there's a couple ways to do this. You can mention several competitors, how you differentiate. Sometimes there's a lot of competitors out there, you can't mention all of them. But mention the types of competitors and then some examples of the competitors. You can also do a matrix like this for some of the top competitors where you show how you differentiate. And of course, you're always going to look better than your competitors on a matrix like this, but it still shows that you thought it through. Any future growth possibilities beyond your current revenue model? What other ways are you going to grow new products, new revenue sources, etc.? Whatever you're thinking about for the future. And then your current business model, how do you make money? Recurring revenue, product revenue, subscription, really however you make money. Financial summary, you don't have to use graphs, you can do it in a different way, but show your revenues, expenses, net income, so they can see where you reach profitability, and if there's any assumptions you need to talk about, mention a few of them in here as well. Your management team. That's crucial, as I mentioned before. Highlight the key members of the team, their experiences, and anything you think that's important for your business. And then if you have advisory board members, mention here as well. Funding goals. If you've raised any money in the past, put this here, including your own money that you put into this. It's important to show that you've had money already put in the business, and then the money that you are looking to raise, and then break down the use of funds. How do you intend to use this money? And they need to be very clear about that. And then exit. How do you plan to exit this business? Nowadays, again, as I mentioned before, it's usually an acquisition, but think through who some of those acquirers could be. And if there's any comparables in your industry of current exits, it's good to mention this here as well, too. And then just cap it off with a summary, highlight some of the things you talked about to get them continued interest in the business. And you can add, there's different slides you can add in these as well, but depending on the business, but at least these are some high level. Now I'm going to real quickly, if I have a few minutes, to just show you an example I put together. I'll go over it quick. This doesn't have all the same slides, but it highlights a lot of the different things. And this is a particular company name out here, but this firm provides 100% cotton collar and other leashes for dogs. But it's a retail product, and I highlighted some of they're already in business. Highlighted some of the things on the first slide, just to give you an idea. So I didn't have a problem slide here because it's a very niche product, but the products themselves, talked about some of the products and the ones they have in development. And I'm going to go over this quickly, so I won't let you read it all, but just to give you an idea of the order. Then I went over the market. Obviously the pet industry is a large market. I broke it down into the different segments of the market, and then the percent of the market they expect to capture in their target market, who they're going after. This particular industry has a lot of fragmentation, so I did a little more detail on the industry and some of the distributors and how they plan to, the different places they're going to go to. Their sales and marketing strategy, for them, they're going through distributors, so they're getting into the Petcos, PetSmarts of the world. They're going after the big stores. Also, they're going to do some online sales as well. This is a distribution rollout. They're going to go to different stores first and then go online after that. Competitive positioning, how they are different than the rest of their competitors with the synthetic leashes. And then I talked about some of the competitors. There are three main competitors in this space. And this is a product flow slide, how they're going to manufacture overseas and how they plan to get it into the market here in the U.S. Pricing model, their retail versus wholesale price. In their financial summary, they've raised some money, they've had some revenue already. Well, actually, this is revenues later, or raising money's later, but this talks about some of the assumptions in their model. Management team, advisors, funding, they've raised a little bit of money. They've secured a line of credit for PO financing for some of and then they're raising $500,000, and their exit is a company in the industry. And then their summary, I recapped some of the main components. That's all I have for you. I'd be happy to answer more questions in the Q&A. Thank you.